$82.7 billion for Ben Affleck's AI company. I read the filing 3 times to make sure I wasn't hallucinating.
Come on, Netflix had to buy Interpositive before Disney swooped in. Classic defensive mega deal.
Defensive? Nate, they paid a small country's GDP for a tech stack that probably just deepfakes Matt Damon.
I would pay a premium for that. But this K-shaped market is totally bipolar right now. Netflix buys AI blockbusters, and Apollo is out here buying window glass.
Automotive and solar glass, actually. And the structure Apollo used to get it is fascinating. The rundown.
$82.7 billion for Ben Affleck.
For his AI company, Interpositive. But yes, I am still processing that number. Netflix just casually dropping $82 billion on a filmmaking tech startup.
It is the ultimate deal accelerator right now. Tech-led mega deals are dominating. Netflix just walked in and bought the whole casino.
I read the press release 3 times looking for a typo. Where is the revenue? I need to see the multiples on this because right now it looks like they just financed Good Will Hunting 3 with the GDP of a small country.
Oh, come on. You know this is a pure tech play. They want to automate production.
Fine. But it perfectly sums up this K-shaped recovery we are seeing. Overall deal volume is flat, but if you have the capital, you are swinging for the fences. Just look at Gilead buying Oro Medicines for nearly $2 billion to expand their inflammation portfolio.
Or the infrastructure space, GIP and EQT teaming up to take down AES Corp, $33.4 billion, massive swings. Dealmakers are highly optimistic for the rest of 2026.
That is a proper mega deal. You do not see those two teaming up unless the asset is irreplaceable.
Exactly. And speaking of boring but beautiful assets, Cintas is buying UniFirst for $5.5 billion.
The uniform rental wars.
I love a good uniform deal, high retention, pure recurring revenue. As a former banker, this is the stuff that helps me sleep at night.
Well, do not sleep too soundly. I am flagging this for tomorrow. You cannot just consolidate the uniform market and expect regulators to look the other way. Market concentration is market concentration, Nate.
You think regulators actually care about who washes the mechanic shirts?
I guarantee competitors are already drafting their complaint letters.
Fair enough. Real quick, the gossip mill is buzzing about Blackstone. Word is they are circling a massive stake in the global cricket league.
Private equity and live sports, name a more overhyped duo.
I completely disagree. Cricket is a massive untapped market for US sponsors. The media rights alone are a gold mine.
It is a bubble. You are buying in at peak valuation because everyone else is doing it.
Spoken like a true skeptic. But speaking of private equity making big physical plays, we need to talk about what Apollo is doing in the industrial space.
Oh, the Glass Act. That is a fascinating structure. The big one,
$82.7 billion for an AI filmmaking company founded by Batman. I honestly thought I misread the terminal this morning.
I read the regulatory filing 3 times to make sure I wasn't hallucinating a decimal point. Netflix buying Interpositive for $82.7 billion is just absurd. It defies gravity. That is roughly the GDP of Bulgaria.
Look, the narrative here is massive. The industry experts are all screaming that AI is the ultimate deal accelerator. Legacy media is terrified right now. Netflix is just playing aggressive offense. They want to own the entire production stack, script to screen, zero human bottleneck.
Nate, come on. You are sounding exactly like the associate who wrote this pitch deck. You cannot justify $82 billion for an unproven generative video platform. Netflix is betting a massive chunk of their market cap on a tech stack that might just be a really good deepfake generator.
I'm not saying the multiple makes sense on a spreadsheet today. I know I sound like a banker right now, but look at the K-shaped M&A recovery we are in. Overall deal volumes are totally flat. The well-capitalized buyers are driving a massive surge in billion-dollar mega deals because they have the currency. They are swinging for the fences.
A K-shaped recovery does not mean you abandon basic arithmetic. I dug into the footnotes on the financing structure. It is almost entirely stock. Netflix is using their high-flying paper to buy a story. It is pure corporate theater.
But if the story works, they win Hollywood forever. If Interpositive actually cuts production costs by 60%, Netflix just permanently broke the economics of streaming. And honestly, I love it. It is so much more fun than watching private equity buy another regional infrastructure play.
Speak for yourself. I actually respect the infrastructure deals, which is why I am far more interested in what Apollo is doing with Nippon Sheet Glass.
Oh, here we go. Maya's True Love, industrial glass manufacturing.
It is a brilliant deal. Apollo gets a global leader in architectural, automotive, and solar glass. Real physical assets, real cash flow, no Hollywood vanity metrics. They are buying the actual building blocks of the energy transition.
It is a solid play, I'll give you that. Sponsors are definitely deploying heavy capital into manufacturing again. Over 80% of private equity deal makers are highly optimistic about 2026 right now. But you have to admit, solar glass doesn't exactly grab the headlines like an $82 billion AI blockbuster.
It grabs my attention because the math actually ties out. The Apollo deal is exactly what private equity should be doing, finding essential legacy assets and optimizing them.
Fair enough. I will take the Hollywood drama, you take the windshields, we both win.
I will take cash flow over hype any day of the week.
Speaking of cash flow and heavily consolidated markets, should we talk about the uniform rental wars? Because Cintas just dropped $5.5 billion on UniFirst, and I'm already seeing antitrust red flags flying everywhere. Voices. I am so tired of alphabet soup recovery models, but this analyst note making the rounds actually nailed it. They are calling this a K-shaped M&A recovery.
Right, because overall deal volume is basically totally flat, but the aggregate value is exploding.
Exactly. The top arm of the K is just massive, well-capitalized buyers flexing on everyone else. You have GIP and EQT dropping $33.4 billion for AES Corp. The mega deal is fully back.
See, I agree with the K-shaped part. I completely disagree with the survey attached to it. They claim over 80% of private equity and corporate deal makers are highly optimistic about the rest of 2026.
Why do you hate optimism, Maya? The sponsors have dry powder. They are deploying it.
Because 80% is a pure sentiment number. Of course, PE partners say they are optimistic on a survey. They are talking their own book. If they admit the middle market is still sluggish, their LPs will riot. I need to see actual closure rates, not just a few giant infrastructure team-ups skewing the math.
Spoken like a true skeptic. But you cannot ignore the catalyst driving the top of that K. The other commentary out today says AI is now the ultimate deal accelerator.
I read that one too. Legacy companies scrambling to acquire AI capabilities.
Scrambling is putting it mildly. They are terrified. It is pure FOMO driving corporate strategy right now.
Which usually leads to terrible footnotes and massive goodwill write-downs in 3 years. Panic buying is not a thesis.
It is if you are a banker collecting the advisory fee. I used to love a good panic buyer.
You really have no shame.
None at all. But speaking of panic buying and massive AI premiums, wait until we get into the math on this Netflix deal.
$82.7 billion for Ben Affleck's tech company. I still cannot say it out loud with a straight face. Spill the tea.
So you are telling me the smartest guys in the room at Blackstone are looking at the global cricket league and thinking, yes, this is the missing piece of our portfolio.
I am telling you that private equity has completely lost its mind over live sports. It is a finite asset class, and they have way too much dry powder.
Hold on, I actually love this. Live sports are the only thing keeping linear television alive. It is a pure monopoly play on human attention.
Or it is just a bunch of PE guys who want VIP box seats in Mumbai. I need to see the projected cash flows before I call it a brilliant monopoly play. But speaking of weird boardroom dynamics, did you see the filing from Perfect Corp last night?
The beauty tech guys?
Yeah, they hastily formed a special committee to evaluate a, quote, preliminary non-binding going private proposal.
Oh, I love that banker translation. Preliminary and non-binding basically means someone floated a number over drinks at a golf tournament, and the CEO panicked and called the lawyers.
Exactly. It reeks of desperation. But it perfectly tracks with what analysts are calling this K-shaped M&A recovery. Everyone looks at the massive mega deals driving the aggregate value up, but overall deal volumes are completely flat. The smaller public companies are getting battered and are begging to be taken private.
See, I disagree on the desperation part. Over 80% of PE dealmakers are saying they expect massive volume increases through the rest of 2026. They are just bargain hunting right now.
Nate, of course they are optimistic. They charge 2 and 20. If they tell you the market is dead, limited partners stop returning their calls. They are just talking their book.
Fair, but if you want to talk about people who might actually be panicking right now, we need to look at the uniform rental market.
The Cintas deal.
$5.5 billion for UniFirst. And if you do not think the antitrust regulators are already drafting their objection letters, you are crazy. I want to look at exactly who is going to challenge this. Tomorrow's radar. I'm telling you, the Cintas deal for UniFirst is going to hit a wall tomorrow.
A $5.5 billion uniform merger. You really think antitrust regulators care about who washes the mechanic shirts?
Yes, they're basically cornering the market on embroidered polos.
I ran the numbers. Commercial laundry is incredibly fragmented. They'll divest a few delivery routes in Ohio and breeze right through.
We'll see. Speaking of wild pitches, what is this Blackstone cricket rumor?
The Global Cricket League. Blackstone is apparently evaluating a massive stake.
Private equity buying into cricket, the ultimate sticky recurring revenue?
Or is it just buyout guys wanting luxury box seats in Mumbai?
Why not both? Also, watch Perfect Corp tomorrow. They just formed a hasty special committee for a take-private offer.
Hasty special committees are my favorite corporate theater. I guarantee the premium in that proxy is an absolute joke.